there's one stock that is about to explode in my opinion, it is a stock in the home equity line of credit lending space. They use AI to make these credit decisions. Home equity line of credit is when you have a home and you want to borrow against the cost of your home. So some people do that instead of taking a personal loan, or I suppose you might be able to take money out of your home instead of going and getting a business loan. A lot of people do it. It's super popular. It's in the same conversation as reverse mortgages, when people want to get old in their house and not lose their house. They're using AI to make these credit decisions. It's a huge market. The stock is BETR, and it went up recently because the same guy who's been all excited about Opendoor, which you may have heard of, has gone up a lot recently. Eric Jackson is talking about BETR as well. And let's jump into the headline. Let's jump into the chart. Let's jump into what a company actually does, what other companies are similar. Opendoor is kind of similar, but it's really just that this little hedge fund manager is stoked on it. So, got to give to the guy some credit. I mean, he definitely has conviction. If you like these sort of ideas, hit the like button and let's get started.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam.
So,
Putnam.
here's the headline. He's the man behind Opendoor. Meme rally sparks 176% surge in Better Home. Here is the chart. Sorry about that little pause in the intro there. This is the chart, and it's shaping up in sort of a flag position. There's some compressed days here, and it looks like there's a nice way to get in where you only risk a few dollars, if not less, and you have potential to go up. Maybe not 50%. That's I'm starting to talk like Eric Jackson here. You can go up 10%, maybe sell half. Maybe it sort of bounces around here, you know, who knows what it's going to do exactly, but maybe you end up selling the rest of your position somewhere around here. Or, you know, you sell the rest, break even, and it goes down here. And you already locked in some up here, so you still make some money, even when your trade plan doesn't go how you want it to go. Okay. So, let's get rid of these drawings so I don't have to see them on my chart, so we can see what's actually already happened. This was Eric Jackson talking about it. This day was September 22nd. If we look at Opendoor on September 22nd, this is what we see. Okay, a big sell-off. Opendoor had already pumped, so it's kind of like the money moved from Opendoor. It's not kind of like this. I think this is actually what happened. People sold Opendoor and they bought Better. Now, I'm not advocating day trading where you sell a stock and then immediately buy another one because you think it's going to go up some crazy amount like Opendoor. It goes up in a single day. This is 25% better. This is way more than 25%. I'm not saying that that's going to happen here. I'm advocating for getting in at a really safe spot where maybe you get a little jump like that. And it might be over like a week. But it's already shown it can make big moves, and it has a lot of compressed, tight days. So you can risk sometime in here. And it's a good spot to risk because the price is traded at all that spot. So if it gets below one of these levels, then like you got to be careful because this could go right back down. But if it hangs there, that means everyone's making money. I mean, people who bought up here aren't making money, but they probably sold a lot of them down here anyway, which means new buyers bought down here. So when the stock price is above where a lot of buyers bought, everyone's making money and everyone's holding or buying more or selling a little bit but not selling a lot. The stock price is staying up. So that's the chart, and that's really all we need to focus on right now. I mean, it was one of those IPO sell-offs. You can see how important technical lines are for IPOs. I mean, it pretty much almost touched that $100 level, which is where an IPO opened at. So that's a level to focus on in the future, but right now, don't really need to worry about that. As far as what the company is up to, it's similar to Opendoor, but no, Opendoor, I think actually BETR is up because Opendoor is down. That's sort of what we just showed by looking at the stock chart. They are pretty similar, a digital real estate marketplace, and they're trying to use AI, of course. Every company, especially new companies who are trying to raise a bunch of money from now public investors when they're listed, are going to be talking about AI. I don't know how much AI each of these companies actually does, but there are some other tickers that are also in the mortgage and mortgage technology space. Redfin, Rocket Mortgage, and Rocket Mortgage hasn't done great recently, even with the rate cut. Sort of rolled over a little bit. Now, you could say the rate cuts were baked in anyway. This is a lot of selling. I mean, this is actually an indication of some news. Yeah, there's definitely some news. Oh yeah, there's this lawsuit I forgot about. They basically, one company paid another one to stop advertising, and the argument is that wasn't totally above the board. Leaves renters and property owners with fewer choices for finding and listing apartments. That's not good because people really hate landlords already. So if they're going to start hating a company that sort of represents landlords, that's definitely going to have a issue, negative effect on the share price. Lending Club moving down some as well. And then sort of in the conversation is Upstart, which does do lending. And Affirm does buy now, pay later. So that's, I don't know how related that move down is. Fintech is definitely hurting right now, though, even as the technologically enabled banks are doing great. IBKR is up. JP Morgan's not great. Morgan Stanley's not great. The actual banks are Citigroup, not great. So BETR is definitely a meme stock. Opendoor is definitely a meme stock at this point. Think like, GME back in 2020 over here. And I guess that was actually in 2021. Man, time flies. AMC as well. Follow GME. So it's kind of like the money flowing out of GME. This was September, first week of February. And then AMC hit in May. But you see, this was pretty much the same week. That's what we're seeing with Opendoor and BETR. I'm almost positive that's what's happening. They're linked. And now you have to say, they're definitely linked. Some big player could be messing around too that you just never know about. There's a pretty clear level here, and it's kind of a speculative buy where the lending companies, and when I'm saying lending companies, I'm talking about the technologically enabled ones. Rocket Mortgage is definitely one of them. Upstart. The technology companies who do lending are not doing so hot. So all you can really look at is BETR, and you can look at Open. If Open really craters here, I don't think that's going to be good for BETR, even though BETR did go up when the money flowed out of Opendoor. I think you kind of need both of these to stay exciting for people to stay excited about a stock that just went up from $15 to $60, and just, you know, on a few days, in one day really tripled, pulled back a lot, but tripled. So that's the play. I guess BLND is another one. It's not one that I'm as familiar with. I don't think it's as widely talked about. That looks terrible. It's a penny stock. I would not focus on that one at all. That's the idea. I gave some price levels and some similar tickers. If you like these ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. Give it a shot. You just automatically get popped in there, and every day you get the best idea. You can ask questions at any time as well. I just am caveating that if you're expecting like a party, it's not a party in there. If you're expecting a bunch of news bots, like, oh, OpenAI just, you know, has a new client of some data center company, and the data center company is up, you know, 0.5%. It's like, that's not what this is. There are a lot of news shows. There's CNBC, Bloomberg that do that. That's not what this is. So if that's interesting to you, intriguing, give it a shot. $25, 7 days. And if you haven't subscribed yet, hit that subscribe button. If you like the video, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.